A warm welcome to StockbrokersInLondon.com's video channel. Today we're going to talk about how to select a stockbroker. Important information and disclaimer: this video is intended solely for information purposes. When choosing your stockbroker, the temptation is to be on the lookout for the best deals on offer, especially given that prices tend to be driven down over time as competition within the industry bites. However, it is important to draw up your own personal dealing services checklist so that you obtain the exact service that meets your needs. Your first decision, therefore, is to decide on the type of dealing service that is best suited to you. The three main choices are execution only, discretionary, and advisory. An execution-only stockbroker simply executes a client's instruction to buy or sell a security, such as stocks, shares, bonds, etc. While this is usually the cheapest option, it is very much a hands-on exercise for the investor and is best suited for those investors who are experienced and or are happy to do their own research. These days, typically the account will be online. The opposite of execution only is discretionary. This is where the stockbroker is employed by you to ascertain your investment objectives. The broker then constructs a portfolio of investments to meet your objectives and has the authority to buy and sell investments on your behalf. This is very much a hands-off service for the investor and more suited to either the inexperienced investor or people that lack the time to do their own research. An advisory stockbroking service, meanwhile, sits somewhere in the middle. Your broker typically advises you on which sectors or stocks to consider for your portfolio, but leaves the actual investment decision up to you. Both advisory and discretionary services necessitate a substantial amount of industry and company research, either sourced in-house or via third parties, and needs to be of the highest quality. Having chosen your basic service, the next thing to check out and compare is the cost of trading for stocks, shares, bonds, options and warrants, etc. For example, does the broker charge a flat fee or a percentage commission? Having ascertained what the broker's basic dealing charges are, you then need to take account of any hidden or extra fees. For example, foreign stock trades will normally incur some form of currency exchange fee and possibly additional overseas handling fees. Stop-loss orders or guaranteed stop-loss orders are likely to cost more, often involving a wider bid-offer spread, i.e. the prices at which shares are bought and sold, which obviously adds to your cost. Next, you should find out the range of services that your prospective broker offers and which markets your broker deals in, including whether the broker will accept deals in stocks of any market size, big or small, or place limits and stop orders on your behalf. Next, you should find out which markets your broker deals in. These can include shares listed on the major world exchanges and key bourses such as New York, for example the S&P 500, Tokyo, Hong Kong, Europe, typically Paris, Frankfurt, etc., Nasdaq for tech stocks and so on. Note the premier bourse in Europe is London, which hosts the London Stock Exchange main listed stocks. Next, does your prospective broker deal in collective funds? In the US, for example, typically you will find mutual funds that can be either loaded or not loaded. And in the UK, a collective fund is commonly referred to as an open-ended investment company, or OIC, or otherwise is known as a unit trust. Next, does your prospective stockbroker deal in penny stocks and shares? For example, in the US, you'll find over-the-counter bulletin board stocks, and in the UK, quoted stocks on the FTSE Fledgling Index and AIM Index. Other instruments that you may need to check up on in advance include bonds, treasuries and gilts, i.e. government stocks, corporate bonds, etc., issued by large companies, CFDs, options, futures and warrants. Note, these are usually for the experienced trader. Tax-efficient products, covering inheritance tax portfolios and so on. It's also worth asking whether exchange-traded funds, ETFs, are fee or no fee. Other more advanced services offered by your prospective stockbroker, particularly for the more experienced investor, that are worth noting include option spreads, contingent orders, after-hours trading, and so on. Also, does the broker offer mobile trading via your Android phone, typically Samsung, your Apple iPhone or your BlackBerry? And in terms of customer service, in addition to online access, you might expect telephone and email support, and from online brokers you might expect a live chat service. Finally, research and research tools made available by your prospective broker are crucial when making actual investment decisions. Among other things, check whether you will have access to in-house research, third-party research, watch lists, for example for stocks, real-time quotes, charting tools, including useful technical indicators and chart overlays, level 2 quotes, and so on. Also check what educational tools are offered. Does your prospective stockbroker offer online education, such as webinars, videos, research notes, and articles, to keep you fully informed at all times? Thank you very much for listening to this introduction on how to select a stockbroker, and hope you've enjoyed the brief overview. We look forward to talking to you again in the near future. Bye for now. For your complimentary report on growth stock strategies, visit stockbrokersinlondon.com.